What's going on YouTube? Mike here, back again with another video. And in today's video, we're going to be talking about day trading and emotional control and how to actually remove your emotions from your trading. So before we get started, make sure to subscribe to this channel and turn on your notifications, because I'm going to be blowing up this channel with new content on a very frequent basis until we can get some momentum on this channel growing. So I don't want you to miss everything coming out. I'm going to be answering a lot of frequently asked questions and a lot of just questions in general surrounding day trading and more specifically Forex and smart money concepts. So be sure to subscribe. Also, before we get started, I'm going to be referencing quite a few resources in this video that are in the links in the description below this video. So rather than say it a million times throughout the video, I'm just going to say it now. Everything I'm referencing is actually below this video. I do have a lot of free resources as well as some paid resources to help you become a better trader. Some of them are specific to smart money concepts. Others are specific to just trading in general. So as I mentioned these, be sure to check them out below the description of this video or any other video on the channel if you're staying around for a while. So without going on much longer, let's go ahead and get started with today's video. And I want to talk about how to actually remove your emotions from day trading and how you can use a few of these pointers to dive a little bit deeper into why you are an emotional trader. I'm assuming if you're watching this video, then you are new to trading or you're an intermediate trader who's been around, but the thing that's holding you back is your emotions. And so I want to start creating content like this surrounding some of the topics that are a little bit less talked about and less discussed in the trading world, and it's more specifically on YouTube. And so yeah, let's go ahead and get started. These are going to be a few tips that I would recommend and that I have either gone through myself or been recommended before by other mentors along my process, and they really worked for me. Okay, so number one, this is just the absolute most important, hands down thing that every trader needs to have, and that's a trade plan. I do have a free trade plan template that's 100% free. You know where to find that below this video, so be sure to check that out if you need help with your trade plan and creating that. But the reason why you need to have a trade plan is because it eliminates all question that there is surrounding your trading. So it doesn't matter what strategy you use. It doesn't matter, if you use indicators or not. It doesn't matter what instrument. Anyone who's trading needs to have a trade plan. This is similar to saying you're going to take a road trip without a map or without a GPS or navigation on one of your devices. You would not know necessarily where you're going if you're driving across the country and in what the fastest route and the easiest route to get to where your destination is without navigation. And it's the same thing with trading. If you're just looking at this chart in front of you on this screen, you have absolutely no idea, like without a trade plan, every single candle becomes kind of a threat or becomes a fear of missing out or a fear of hitting your stop loss, or it becomes causes this elation effect where you're over the moon about the potential, but you don't know the definition of how you're going to trade it. Okay, so there could be a million different combinations of how people would enter and exit trades just in this little window of this 1 minute time frame on this chart. And that is totally up to you and how your trade plan reflects in the ways that you're going to actually react to that. Okay. And so having a trade plan that includes a detailed explanation of your strategy, as well as being able to explain your strategy in one sentence. If you can't explain anything to me in one sentence, then you don't understand it yourself. A lot of times it helps to just simplify your strategy and simplify your trading in general by just explaining your trade plan in one sentence, rather than having these like 50-page long strategies or trade plans with your strategy. It can also help to have a detailed version as well as just a one sentence simple explanation of what you're doing. So after having an understanding and rules in place for your trade plan, having also a exit strategy as well as stop loss placement, and an adding strategy. So if you're actually going to add to a trade, when and how you're going to do that should be also included in your trade plan as well. Once you have a detailed trade plan in place, you should be referring to that every single day before you start trading. And doing that alone, just looking at my trade plan every day, helped me so much in my trading, because it reminds me, and it's like a warm up of like what I'm doing and why I'm doing it, and just kind of my process as a whole. And so those are a few tips surrounding trade plans, but essentially having a trade plan, it just removes any question, which then removes any fear or any, greed or anything like that, because you just know, okay, I can just fall back on my trade plan that just tells me exactly what and how I'm doing and how I'm going to do it. So the next thing, number 2, for controlling your day trading emotions and taking your emotions out of trading, is just accepting the fact that there's going to be losses. Okay. You're going to take losses. It doesn't matter who you are. It doesn't matter what strategy you use. It doesn't matter what time frame, what fancy indicator, what instrument. It does not matter. You are going to take losses. And I think a big reason why people struggle with trading is that they can't accept that. They're attached to the finance. They're attached to the finances inside their account balance so much, and they don't want to lose it, that they end up manifesting those losses in the first place, and they end up creating a harder time for themselves because they can't accept the fact that you're going to take a loss. Nothing is going to be 100% accurate. There's not even going to be anything that's 90 or 80% accurate, despite what people say. And if it is that accurate, usually it has a negative risk to reward ratio anyways, and you're going to blow up your account sooner than later. So just don't even look into that kind of stuff, and just accept the fact that you can make a great profitable strategy on a 60 or even 50% win rate, or even lower if you have high risk to reward. Okay. So that's another thing we talk about in my course, and just this channel in general, is risk to reward. So you also know where to find out more information on that. Be sure to check that stuff out. And yeah, accepting losses is just going to like alleviate a lot of stress and anxiety for you. Okay. The along those lines, accepting losses, this I guess could be a bonus tip, and that's reducing or adjusting your lot size or your trade volume to help manage your emotions. Okay. And so if people are nervous or scared, or they go immediately into fear when you open a trade, that can also have a lot to do with your lot size or the amount that you're risking. Okay. And so I have a tool that I recommend to all traders, which you know exactly where to find it. There's a link down there, and if you use my promotional code, you can get 10% off of that. And that tool, it helps you risk the same amount per trade, and it also selects the same amount. It also allows you to select the amount of risk that you place when you open a trade. So for me, I just risk a percentage of my account every time. I know there's like a lot of debate and different reasons why someone would want to make a trade based on risk percentage versus a fixed lot size, and that tool allows you to do either one. But for me, what I do is risk 1% of my account on every single trade. Okay. If you're adjusting your risk also along those same lines, and you're doing a different risk on every trade, then you're also never going to be consistent, because the one time that you get that big win and you only risked like 1/4% of your account, when every other time you're risking like 10% of your account, then you're never going to be consistent. So risking the same amount every single trade, as well as adjusting your lot size to fit your emotional level as well as your trading experience level, will help a lot. I guarantee that if you're watching this video, if you're searching how to actually manage your emotions and take control of that in your trading, then either right now or at some point in time, you know what I'm talking about over leveraging your account. So just stop doing it and risk a smaller amount. And that will also take out a huge amount of the emotional swing in your trading. And the fourth tip for taking the emotions out of trading, emotional control, is reducing the noise. Okay. And so what do I mean by the noise? The noise is all of the constant influencers and the constant YouTube channels and the constant, Instagram traders that drive 17 supercars and their mansions and everything like that. And I realize I may be shooting myself in the foot by saying this because you're watching my YouTube channel, but getting rid of all of the extra, just like ridiculous stuff that makes you try to speed up your process to get to where that mentor or that guru or that Instagram trader is going to affect your emotions, because you then start to associate every single trade with either A, tomorrow you're going to buy a mansion with 17 supercars, or you're going to lose everything in one trade. And that is not a good place to be in. So reducing the noise in terms of the media that you're taking in around trading, and just cutting ties with all that extra bullshit on Instagram and YouTube will make a huge difference in your emotions. Also, what I mean by reducing noise is taking off all of the indicators off of your charts. Okay. I know there's gonna obviously be people who see this video and say, no, I'm married to my indicators and I'm so obsessed with them because of all these reasons as to why they work. But for some reason, you're still searching for the number one answer. Hint, hint. I would recommend just at least trying to take them all off. Okay. When you have 1, 2, 3, 5, 10, however many indicators on your charts, it is making it so confusing, and you have so many rules that you have to have matched up, that you're really shackling yourself down and preventing yourself from being able to experience the freedom of trading without indicators. Okay. And when you have the freedom, the emotional freedom to trade based on what is actually happening in the market, based on real live, um, you know, real live recurring patterns that happen, and this is not patterns like retail traders, this is patterns like supply and demand, then all of a sudden you now know, okay, I understand the market as a whole. I'm not gambling based off of all of these patterns that show up in my indicators. I'm trading with the market based on things that I see happening repeatedly over and over in real live market data. Okay. So there's a big difference between that. And when you understand the difference between gambling and trading, and that retail strategies using indicators are essentially gambling, then that, in my opinion, also reduces a lot of the emotion. Okay. Because in most retail strategies, you would be really hard pressed to find anything that offers a risk to reward ratio of higher than 1 to 2. Sure, there's going to be people that comment on this video and say, yeah, my strategy gets a 1 to 5, 1 to 10, whatever. But most of the average strategies that you look up are going to be really low risk to reward. But with supply and demand and smart money concepts and all that, we have a consistent high risk to reward ratio in all the trades. Okay. I don't even open a trade unless it's a 1 to 5 potential gain. And that in itself also helps reduce emotions. Okay. And that leads me into the actual now fifth topic of how to reduce your emotions in trading, and how to take emotional control back in your trading. And that's getting a higher risk to reward strategy. If you're trading a consistent 1 to 1, or a consistent 1 to 2, or a consistent 1 to 3, you're not ever going to experience real gains in the market, because most of the time, even though regardless of what your famous Instagram influencer tells you, the strategies are not going to be a 70, 80, 90% accurate. They're just not. Even if they are, you as an intermediate or beginner trader are not going to be that accurate with your trading. You're going to make mistakes. You're going to make mistakes just like I did, where instead of clicking buy, you click sell, or instead of, moving your stop loss, like you move your stop loss too high and you get stopped and then it runs into profit, stuff like that. You're going to make mistakes. And so having a higher risk to reward strategy that offers 1 to 5 to a 1 to 10, or sometimes even bigger trades, then that also takes a lot of the emotion out of it, because you can say, okay, I can patiently wait until a very clear setup, and I will take this trade that's a 1 to 5 or greater. And I know that if I take a loss, then the next one's going to be a 1 to 5 or greater. And I can not worry about being 100% accurate, which is impossible to begin with. And I can start worrying about just trading my trade plan. And I can understand that, okay, when I take a 1 to 5 win and I do that 2 or 3 times in a row, and then that next loss or that next string of losses is not as big of a deal, because I know that winning trades win more substantially more than when I lose, then that itself releases a lot of emotion out of your trading. Because if you're trading 1-to-1, 1-to-2, 1-to-3, you're going to have to take way more trades to get ahead. And you're then just compounding the process of, over trading, greed, fear of missing out, all that kind of stuff. And you just become way more emotional in doing that. So I am not necessarily recommending you abandon your current strategy, but I am at least recommending some way for you to increase the risk to reward ratio. And in my opinion, I found the most success with that doing refined supply and demand and smart money concepts, which is what this channel is all about. So you know where to find more information on that. Be sure to check that out if that's something that you're interested in. Which now that leads me back into something I already kind of touched base on earlier in this video, and that is your risk and adjusting your risk. Okay, I'm not going to go super deep into this because I already talked about it a little bit, but you need to check your lot size and your risk percentage of your account, and you need to keep that in check. Because if you are leveraging half of your account or 10% of your account or 25% of your account or whatever on every single trade, and you're just hoping and praying that this trade pays off, and oh my God, it's going to win, it's going to win, it's going to win. And then it does. And then you keep doing that, but you're not accurate enough to maintain that win rate, then that is going to be very detrimental to your emotions, because you then think, okay, I'm going to place this winning trade. I'm going to risk 25% of my account, 50% of my account, whatever. And I'm going to, hope that it wins. And when it does, then I'm going to do the same thing again, repeatedly, over and over and over. And you're just gambling. At that point in time, you are gambling. And that's where trading gets a bad rap, is from people doing that. And then going, oh, I couldn't figure out trading because I risked, 80% of my account on every trade and I blew it in 2 trades. That's not trading, that's gambling, okay? And when you gamble, it's going to be emotional. If you go to Vegas and you go there with, I don't know how much is realistic for that, because I've literally never done it and don't plan to. But if you go there with $1,000, $5,000, $10,000, $20,000, and you start throwing that money out the window onto the blackjack table or whatever the hell you're gambling on, then you are going to be very emotional, because you don't have any you don't have the consistency built up in winning in order to trust the process and trust the outcomes of your gambling. Okay, so by reducing your risk and then also increasing your risk to reward, and as well as the other topics in this video, you can really seriously reduce a lot of your emotional swings in your trading and regain emotional control. And so this is just the tip of the iceberg on this topic. Like I said, be sure to subscribe to the channel, turn on your notifications, and stay tuned for the next video.